everybody, thank you so much for joining us at this Homebuyers 101 class. The whole point of this class is to really just go over some of the basics that we find a lot of people have questions. So as your questions come up, please let us know, shoot them out there, and we will make sure that we get them back to you as quickly as possible. Hopefully through this that we'll be able to answer a lot of those questions for you. So we're so grateful that you joined, and again, hope this adds some value and create some thought process about why homeownership is such a passion of ours for other people, so that we can start building wealth in real estate for generations to come. So I'm JJ Mazzo. I'm a senior mortgage banker. I've been in the business 25 years. I've been in the top 200 mortgage originators in the country out of roughly 500,000. I don't say that to impress you, just to tell you I've done this a really long time, and I've scraped my head a few times and really just have the experience to be able to help you. I'm also a mortgage coach, so I teach other loan officers throughout the United States in the gold standard of coaching called the core training. So this is a passion of mine, just educating people on. We're going to go over some loan programs, credit. We're going to look at the real estate market outlook. We're going to go over the M's. You're going to learn what those are as far as owning versus renting comparisons and the cost of waiting, and how we can set you up for success going forward in the future. So let's start here. Why'd you come today? What is the reason? Where do you want to be financially in 5 years? What's stopping you now, and where are you? Maybe you came just to get some, little pieces of information. Maybe you're thinking about buying a home, don't have the money, or you have credit challenges. Whatever those reasons may be, I want to make sure that we accomplish those here. But more importantly, where do you want to be in 5 years financially? These are going to be the things that we need to be asking ourselves, because 5 years goes by really quick. And then really, what's stopping you now? And where are you now? Really looking at your overview, because once we know what those obstacles are, it's a matter of overcoming them. And I've said this before, there isn't anyone that I can't approve for a mortgage. It's just a matter of how much and when that we do that for them. So there are 5 ways to become wealthy in the United States. Number 1 is inherit it or marry into it. That doesn't happen for many or most of us. Maybe you have a rich uncle. Playing the stock markets. This is sophisticated, it's risky, it's time consuming. It really does take quite a bit of education and learning how to do this. Own a business, massive risk. Most businesses fail in the first 5 years, but obviously becoming an entrepreneur, controlling your destiny, control your wealth. An entertainer, athlete, or winning the lottery. This is also pretty extremely rare. I don't have too many of those that I know. But number 5 is the most common person way of gaining wealth. This is owning real estate itself. Owning real estate is one of the most important things that we can do, because we need a place to live, and we're always going to pay a mortgage. It's just whether or not we're going to pay our mortgage or somebody else's. And for me, it's the easiest way, and it's a requirement to live. So we can obtain this with no investment with many of the programs we have. So again, top 1% of loan officers in the country. I've helped over 5,000 families. And I do these seminars because 82% of Americans have no ability to retire. I have an 87-year-old father that I take care of, and 1 in 3 Americans do not have the ability to save for retirement. My father does not have anything other than the Social Security that he's racked up of about $1,100 a month. When I started seeing that, it really hit home more to me than anything else growing up with that, talking with him. So really, you can look here and see where you fall into it. But for the most part, only 13% have $300,000 or more. So we need to come up with ability to retire and set ourselves up, as well as set our children and our children's children up for success as well. So the biggest barrier for home ownership, down payment. Most people think they need about 20% to down for the down payment. Myths and misinformation. It's really just a lot of lack of information out there. Many people also think they need to have perfect credit in order to buy, and that is not the case at all. Or it's too scary of a process for them, and they're overwhelmed and don't know where to start, and they didn't think they had the income. This was my father. Really never purchased a home because he didn't think his credit would qualify. He didn't have a down payment, and he didn't think he had the income to qualify. Literally his entire life. It wasn't until he was about 65, I had already been in the mortgage business and able to guide him to buy his first condo, in which case they had made great gains off of that and helped my mother and him for their retirement. So we're going to talk about conventional loan products, which here in Orange County goes up to 765,600. Conventional loan products have as little as 3%, 5%, 10%, or 20% down. There are programs also that are conventional loans that we can do that have even more down payments. The more down payment that you put, the better the terms and the interest rate that you have. FHA is 3.5% down for a standard FHA, and again, go up to 765,600 in Orange County itself. And we do have down payment assistance products that we'll talk about in just a little bit. The VA is 0% down. This is no loan limits anymore in the VA as of 2020. These are probably some of the best products, as it should be, to take care of our fantastic veterans. They have very great interest rates for disabled veterans, no fees, and the USDA, which isn't really very common, zero down payment. That typically is going to be for farmland. So if you know someone with acreage or farmland, that's where that's going to be. Jumbo loans, that's going to be above the 765,600 loan limit, is going to be considered a jumbo loan. Those are going to be the most difficult to qualify of all of them. They're a specialty product. There's limited investors. They all have their own rules, the most money at risk. And so typically those jumbos are going to have 20% down. There are other loans that are jumbos that we do have available that have less than 20% down, but have higher risk and thus increased interest rates to offset that risk. So various other loan programs. There really isn't a program not out there. It's a matter of sitting down and really determining what your goals are. And I always say this, I wasn't really big in algebra growing up, but all I do all day long is solve for X in algebra. And that's just knowing how much money you have to play with, and maybe that's zero, and how much monthly you have budgeted for housing. And I know that's not zero because everyone's going to be paying rent. And then coming up with a purchase price that you can afford and what program to put you in. So let's talk about credit a little bit. This is also another objection. There's 55 different algorithms to calculate your credit score: mortgage, credit cards, online, auto, etc. Revolving credit cards make up 30% of your score. It is huge. And obviously payment history itself. You want to keep your balances below 30%. So making sure you make your payments on time, keeping your balances under 30% are going to be the key to maximize your credit score. Don't pay old unpaid collections. Unfortunately, collections, as they sit there over time, the collection itself, the older it gets, the less impact it has on your credit report until it falls off. Many times people want to pay an unpaid collection. That only makes sense if they're going to delete it from your credit report. Otherwise, a 5-year-old unpaid collection has less detriment than a 5-day-old paid collection. And what happens is, if you have a really old collection and you go ahead and you pay it off, it's bringing that bad account back to light. So the biggest myth in our industry: inquiries don't have that big of an effect. We want to make sure that you understand that when we pull credit, you do have time to shop, and it really has an effect of maybe 1 to 3 points. Your credit cards, using those on a monthly basis, is going to have more of an impact than anything else. So don't do anything at all until you talk to us. We can guide you in the right direction with talking to the appropriate people based off of your thoughts on credit and the credit report itself, which we pull a full factual mortgage credit report. This is an $85 report. It is not the same thing as the free Credit Karma reports and even free Experian reports. Completely different scoring system that's not used in the banking industry. So you want to make sure that we have a full factual mortgage credit report. And that's something only a mortgage bank can provide for you. So let's talk about the instability of renting, the moving and the money. The rent increases. You do not have any control over. There's no security. Short notice to come up with first and last month security deposit, the moving costs, and taking out of time to move, out of time work to move. Kids packing a new home, repeat. Keeping kids in the school district, especially if there's not something that meets your needs, this can be a struggle. and then trying to find something on short notice and a lot of uncertainty. As you know, the owners, the landlords, especially right now, with them selling the homes, really leaves the people living in those homes up for chance. When you own that home, you control your destiny at the end of the day, and that's what we want to make sure we're providing for everybody. Renewing a lease, finding a new home quickly, like we spoke about, no control over the home, the landlord, repairs, and stress. And these are the things that we find that are way, way more common than when owning your own home. So is risky to own a home? You tell me. Ask your landlord to share in your future expected appreciation. That's the money that gains on the house over time. Ask your landlord to share with you the tax advantages they receive for owning a home. And when you move out, ask the landlord to give all of the rent you paid back. If you rent, it's 100% loss guaranteed. And really, in my opinion, renting is the riskiest play of all. So let's look at it. You have your long-term gain and short-term investment. And so we're going to look here as you see rents increase, and you can see here your mortgage payment would stay the same for the 30-year period of time. So sometimes you're going to pay a little bit more out the gate, but in a few years you will find that you're going to be paying less. So you can see an average appreciation forecast. We have 60 years, an average 6%. The home goes up in value, 10-year 4%, 5 years 4%, 1 year 5%, and the next 5 years an expected 28% in increase in value. It's whether or not, of course, that leveraged amount that you live in that home is going to go in your pocket or your landlord's. Why is now a good time to buy in Orange County? The 5-year gain forecast is $230,670 in appreciation gain. And we want to make sure that's also going into your pocket. Why is now a good time to buy? Because COVID is a natural disaster. It's not an economic collapse like we saw in 08, and an economic bounce back that we're already seeing is going to be fast. The average American's home has 26% equity in it. And this is a CoreLogic report, which is reporting that we had pulled. The federal government stimulus plan is allowing Americans and businesses to rebound quickly post-pandemic. Economists usually predicting that as of April 2020, we'll have a net positive appreciation for the year in 2020, and that's already proven to be accurate. Negotiate better deals on the home and prices right now, but we're not seeing that. Unfortunately, it's already started. We have low inventory and a lot of buyers out there that are already driving these up. So I wanted everyone to see the snapshot of what we were looking at the beginning of COVID and what we're seeing today, and how it's so important to move quickly. Let's do a little comparison. All right, so comparable rent in Orange County, let's say in a single family home, is roughly $4,000. Let's use a 3.8% annual rent increase. This is the national average itself. So we're going to go ahead and take a look and compare it to a $700,000 home with an interest rate of 3.5. Keep in mind they're as low as 2.5 right now. So I wanted to actually use something that showed increased interest rates to show this still has value, and even more so with lower interest rates, bringing that up to an $800,000 purchase price in today's market. Annual property tax of $7,000, monthly homeowners insurance of $100, repairs and HOA of $200 itself. So these are what we're going to compare them to. I wanted to be conservative to be fair. Estimated cash flow. You're going to see buying year one, your monthly expense, including taxes, insurance, and even including maintenance and repairs of about $4,027 off of a 3.5% interest rate, showing that it's always a good time to buy. Rent year one with property is going to be $4,030. You're going to have renter's insurance in here of $30 plus your $4,000. And then you can see over time with the 3.8% how the rent payment is going to go up. And in 5 years' time, you have a $4,600 rent payment while your mortgage stays at $4,000. I know this to be true from renting a similar home for a similar price that we love very, very much. And you know, in Orange County, that's going to be very common of what it is that we're looking out there itself. Let's talk about the cash flow difference of $19,148. So the starting home value of $700,000, you're forecasting the appreciation that the home after 5 years is going to be worth about $919,281. The amortization gain is what you've paid on that mortgage of $72,120. So you've paid it in down on the loan, but you actually get that back in equity. So instead of just going in rent into the pocket of the actual renter. Tax benefit as well, standard deduction at 24,800 is 22% tax bracket. And the benefit above the standard deduction after 5 years is about $6,000. So these are all of the combined gains. And then let's say we're going to sell this home. The real estate commissions are 6%. That's again estimating high for a $55,157 real estate commission paid based on that value we spoke about after 5 years. When we're all said and done, the net gain for buying a home is going to be roughly $249,437. That is a huge difference in rent versus buying, versus renting and 5 years later, your net gain is actually negative from all the rent that's been paid out. Now, it does work out fantastic for the landlord itself as they're going ahead and paying down their mortgage. And you can also see why people like to become real estate investors and utilize the loan programs to leverage and buy other homes to create wealth for their family. But really, we want to talk about home ownership 101. So we can do any type of mortgages anywhere in the United States. The real estate agents we work with, we have vetted out. We have a team of agents across the United States who can handle any clients that are looking to buy anywhere. So really, we have to ask ourselves what our next step is. Option A is we just go ahead and we sign off, go to Netflix, watch a movie, and forget this ever happened, and you won't hurt my feelings, I understand. Option B is set up a one-on-one, no obligation appointment with myself and my team for a virtual buyer consultation over the coming days. And I'll make sure Chris on my team takes great care of you, or any of my team, they're available. Then we want to complete the survey that'll be emailed to you after we're done, indicating you'd like to schedule that one-on-one consultation to get your pre-approval started. Again, no cost or obligation. You don't know, there's nothing ventured and nothing gained unless you take that first step. So why you should choose right now. We're going to give you a reimbursement of your appraisal up to $500. And the agents that we work with will give you a combined $2,000 including closing costs towards your home purchase. So if you're really thinking about doing this, now is the time, because I'm going to also make sure that we give you a $525 one-year home warranty. And we have agents that will help buy you out of your lease so you can own your home. This is a value of over $4,000, not even including any agent helping to buy out of the lease, if that's something that you need to do. So we want to make sure that we're leaving all of the reasons so that we can get the results and taking that next step. You only need to get these two incentives, to do these two simple things today. Complete the survey and mark yes to a free consultation, and complete your home buyer application. This needs to be requested from us and we can send it right over to you. And feel free to like us at Facebook or like us at the Mazzo group on Instagram, or reach out to us at 877-JJ-Mazzo, and we are happy to help you at any time. I hope this was super beneficial, and I'm very grateful you took the time to watch it. And I look forward to answering some of those questions now, and again, helping you with your path to home ownership.